Welcome, Peter J. Merrick. And let me tell you a bit about Peter before we get started. Known as the King of Main Street, catch this internationally recognized author, commentator, columnist, blogger, novelist, keynote speaker. I think I'm running out of fingers, but here we go. Specializing in US and international cross-border risk mitigation. Over 30 years experience, advises business owners, professionals and families on financial sovereignty, business succession, and estate planning. Now, they're the things that I've spoken about over and over and over again. But today, I would love to talk to Peter a bit about the insurance side of things. So, Peter, welcome. Thank you for coming on board.
Thank you. Well, thank you for having me. And I'm so, yeah, we were just speaking earlier, Craig, and we were mentioning how incredible it is that we're thousands of miles away and we're having this discussion, and people who are in different locations of the world, they're going to be listening to us. And you and I both specialize in succession planning and M&A, and be able to have these types of conversations were unheard of just like 10 years ago, and being able to work and just live a different life.
It is. And I mentioned that you do cross-border, as I have done as well. This technology just would, when I've done this, I set up factories around the world with venture capitalists to bring them together into single units. Having this sort of tech back then would have just made life so easy. Rather than having to get on a plane, go over, spend a week of solid, hard work there, fly back, then something's gone wrong, or I missed this, or I need to go and do this again, get back on a plane and start all over again. And when you've got 14 factories, as I did at the time, I spent a lot of time on planes. So this is brilliant.
Well, one of the things which is really important that I find, especially with the clients that I've dealt with and I deal with in succession planning and M&A, is that they're older and they really appreciate the human being. And yet the younger generations, they don't have the same appreciation. And that's something that I've written in a number of textbooks on succession planning. And I remember working with a gentleman, his name was Grant Robinson, and he created an incredible program that he sold to one of the large four, prepping family businesses to transition. And in essence, if the family decided they didn't want to transition, then they would go into M&A and look at selling the business, whatever options were available for them. And what was really interesting, because I had the opportunity, because I would send them over to Grant and his they were chartered accountants, now they're CPAs. And it was interesting to see the different generations, how they looked at things. And with technology and things of that nature, like my older clients, when I was doing a very large M&A that was about a $18 million EBITDA, the founder wanted me to get the stick and drive over to his factory and drive it over to the accountants who were doing the evaluations. He didn't feel safe sending it over the net. Had enough technology advancement that he gave me a stick. But that was the role that I found, and it had to do with an age thing. And I'll just share with you a story that always sticks in my mind. The last time, Craig, you and I spoke, I was sharing with you a story about my friend who, in the dental industry, is one of the top practice management experts in North America. And her daughter was in first year university. I don't know, in the States, they call it college. Where I come from in Canada, it's university. And her daughter just broke up with her boyfriend. So she was not going to try out to be a cheerleader. So her mother, being an awesome mother, got in the car and drove 5 hours. And she sat with her daughter, and this is her first great love. And that's not the part that was interesting. She said her daughter then turns to her and says, "I'm so sad for her ex-boyfriend because he removed himself from the group." And she didn't understand, what are you talking about? On TikTok, you can put all your friends on and you'll know exactly who is with who at what time. And I'm so much into my privacy, and these kids, and I think this shows everything. They would let everyone know where they were. This person here's walking to this restaurant. I'm talking, you and I next to each other. They would see it. And she was upset because he removed himself from the group. And she thought he was all alone. And I'm thinking, my clients are immigrants to technology, just like you and I are. I remember when I got in the business, the clients I dealt with, they thought the greatest invention of all times was a fax machine.
Fax was the greatest invention. And then my manager asked me for a coloured fax machine because I was in the IT industry. And he said, can you get me a coloured fax machine please?
So the world has definitely changed, but in a good way.
Absolutely. So the thing that I really wanted to tap your brain on, Peter, today was the insurance side of things on M&A. It has changed so much as well in recent years. Not so much in Australia yet. It's getting that way, but overseas it has definitely changed. You can now insure against having an M&A failure. Extraordinary. So you insure against having a bad project manager. Love that.
It's everything has changed. Let me just step back because like you, I also deal with mergers and acquisitions. And really when someone actually steps in, I either got brought in as a specialist or as a generalist, as a
Mm.
GP or a specialist coming in. So there's certain areas that I go deep. I was a university prof for 12 years and I wrote for a number of publications, and my expertise was always writing on succession planning, estate planning. That's it. And it really has to do with what you're mentioning, risk mitigation.
Mm.
So there's three questions that I always ask. And, I always joke that I could never be like a stockbroker because I walk into a building and I look for the exits. I remember
Yeah.
very early on, I made a pitch to an older gentleman, and he told me a story about when he started. And he said that this older gentleman who had lived life said, where's the fire escapes? Everybody wants to know the fire escape, right? It's like, it's great. You end up being something that's great, but what happens if it doesn't turn out? So when I look at insurance, I look at it two ways when you bring it up in the planning process. One is dealing with the worst case scenario. If everything blows up and I look not so much on property and casualty because that's more the realm you're talking about in blowing up, or let's say someone doing a film deal, things of that nature. I've seen this. This has to do with the
Yeah.
human being, and so you want to look at the worst case scenario because let's say we were speaking before about a bunch of you focus on dental practices. And this is an expertise. It's not like you can just find someone or hire someone to take over. So if something happens to an individual, are they insured? And in essence, if you put the insurance in place for the key people, you'll get more money for your business. Plus, it's also very helpful for yourself. So that's one thing we look at. We want to look
Mm.
at the worst case scenario because when you're getting lending, all that stuff, it shows planning. It shows that you put in structures because you and I have walked into situations, someone could have a lifestyle company and they're making $5 million a year. If they don't show up, there's no business.
I did a eyebrow washing company. Now you may not know if they even existed, but yes, that business there, $85 million, by the way.
Wow. Well, I did an outhouse company. And you want to know something? They had gorgeous toilets, like almost like they would come into parties and it'd be like really fancy toilets, like women's and men's, to the plastic that everyone knows that would go, just on like a construction site. So there's all sorts of businesses.
Mm.
But getting back to what we were sharing, that in insurance, you want to look at the worst case scenario. So what are the worst case scenarios that you can have? You have death. Unfortunately, most people don't get death. Most people slug it out a bit. Most people would love to go to bed and not wake up. That's the way that we want to lead. However, there's disability. There's also critical illness. So these are things we have to look at for the worst case scenario. But then there's the other spot. Someone's got a lot of money in the corporation. They're going to receive a lot of, and what is life insurance? Life insurance is a legislative tax shelter. There's no other one. There's nothing like it out there. People can go and sell you different tax shelters. It's not written in the Income Tax Act. of these countries. So it's meant for the average working person. And within these policies, there happens to be a cash component. So if you have lots of money and you know how the calculations are made, you can drive a truck through it. And for many countries in the United States, in Canada, and Australia, we could structure it that if most sales that I've experienced are not selling the shares. Nobody wants to take over somebody's planning. It's an asset sell. So what do you do? How do you
Yes.
get the money out of the company? This is where insurance comes in. You flow the money up to a holding company because maybe you keep that company or you move all the excess money up to a holding company, and now you've got the money in the company. You can shove it into a policy, and then you can go and access that money. You can go to a third party bank or you can go to the insurance company and they'll lend you the money. And then when you're no longer here, you can have that money tax free out of the company. You're saving whatever the dividend rate's going to be, whatever country you're in, whatever the capital gain rate is, whatever the income rate is. And on death, it comes out of the company tax free. And in essence, and I will stress this, it is a legislative tax shelter. And the
Wow.
government knows what it does. They do know what it does, but they allow for it because the principle of a life insurance policy is for widows and orphans. But if you have money, especially when you're coming into your big event, when you sell your business, that's the biggest event. You're able to access your money and save a lot of money on tax. And that's where one of the things that's really interesting is I taught at university and I taught three types of students. And this is the part I found really interesting. I taught CPAs or chartered accountants. You guys have CPAs or chartered accountants?
We have both.
Okay.
Yeah, we don't discriminate.
Okay. Because it's a new thing in Canada. It's been a way. It's been in the. I live in the U.S. now, but in Canada it was the highest level were CAs. So I taught accountants. People were going into the accounting stream. People were going to the CFA stream, and people who could go into the insurance stream. And most people wouldn't choose to go into the insurance side. They thought it was boring. But at the
Mm.
end of your life, this thing is a tax shelter. It's not going to make you money. So the way I would look at it as someone who's an expert in tax and insurance, they're a relief pitcher. They're not going to get you points on the board. But their job is to keep the other side, which happens to be the tax regulators, from taking your points. And it is something you don't have to worry about the tax authorities coming back and saying, no, this was fishy. You did this because it was all tax driven. No, you don't. You can sleep at night because you know that it's been approved by the insurance regulators and they know what it does. That being said, very few people really know how to really take advantage of it because they don't know the
Mm.
calculations. They don't know how they ride like how much insurance to how much cash value. They don't know how to do that. But if you understand it, it's quite magical. And the number one thing is people don't want to go offshore. People, well, you're in the Commonwealth. I'm from a Commonwealth country. I don't, Canadians are really conservative. Americans are more aggressive. I'm here and I'm in shock how quickly people shoot the trigger. I don't know how it is in Australia, but they're pretty slow in Canada.
Australia and
Uh,
Canada are pretty close.
yeah,
They're
it's
very
very
closely
slow.
related.
Yeah, very, very slow. And one of the reasons happened to be is the United States more litigious. They'll sue. Canadians, like you'll never get your money back, so you better be careful the person that you're dealing with. And but that being said, the governments of the world are hurting for cash. So they're looking for ways of taxing. Well, the one thing about insurance is you've got multi-billion dollar companies that are lobbying the governments not to take away the tax efficiency. But again, as I shared with you, it's risk management. However, it's also a legislative tax shelter if it's used properly. And in succession planning and selling your business, it's a way of pulling out huge amounts of money while you're alive to live on, tax free, and the money goes to your heirs, pays off whatever needs to be paid off. You die tax free if it's done.
Wow. That was not the response I was expecting at all to get started with this. That's incredible. I was unaware of that. When you
I'm
talk about,
area. I'm a
yeah,
nerd in this area. My father was a tax accountant. for his entire life. So that's can't make you money. In my family, we save you money.
Mm. Well, in Australia, there's a bit of a joke. If you want to make $1 million a year in Australia, that's easy. You've got to make $2 million because the government's going to take one of those millions. Right. Okay. Well, that was very interesting. Explains why you do all this stuff, doesn't it? Three
Well,
textbooks.
can I share? Can I step back and share with you? So I was a university prof, and back in the early 2000s, I had big eyes in my early 30s, and I blew up. However, I found out that I had the gift of the gab, and I'm able to write. And so I became a university professor, and I was starting out again, and I was ordering all the textbooks from all the large publishers. And at that point, I had this idea: I'm going to go and write my own textbooks because I didn't like what was being taught because it was taught about a younger society where it was all about wealth accumulation. And what I was starting to see, and from my reading and from hearing it was going to be succession planning. This is the early 2000s. Now everybody talks about wealth management. They didn't talk, it was investment management. It was about growing your assets. It wasn't about maintaining it and distributing it. So in my research, I spoke to a number of people who were a lot smarter than me, who had written textbooks, who some of them charged $1,500 an hour. And if you want free advice and get them to educate you, you ask them to write a chapter for the largest legal publisher, and they'll answer your questions for free, right? Because these were things that I would go to them that they were experts in, and I got tutoring. Now, one person I spoke to, he said to me, "We have entered the stage of the generalist." And that was sort of sticking in my head. What's the difference between a generalist and a specialist? And I started searching it out. There were two people I discovered when I did my search on the net because there was very little. One gentleman had been formerly on the National CPA of the United States, and he had written extensively on, like, are you a generalist or a specialist? The other gentleman was a system engineer, and he wrote this incredible chart. And let me just share with you what he did in the chart. I'm going to send it to you. I'm going to send you the
Okay.
chart because I think you'll find it. So a
I'll put it on the end of
specialist,
this video, by the way.
I'm gonna dig it up for you. So
Okay.
a specialist is someone who has a specialty. They drill down. They have a skill set. A generalist is someone who's negotiating personalities because they're like a GC. They might have a specialty. What they're also doing is they're managing on the sale. They're looking for valuators, for the accountants, for the lawyers who are going to paper the deal. They need to know all these different things. They don't have to be the expert. However, they need to know what each of them do. Now, they
Mm.
might have a specialty, and I have a specialty. Like I prefer, when you brought up the insurance, I prefer to do the insurance. But been involved in selling some very large companies because I've had clients who don't want to deal with anyone else. And it's not that I want to deal with them because it's a lot of work to sell a business. A lot of times you put all the work in, and then the individual who's doing it decides that they don't have a hobby. So they want to
Mm.
die with their boots on. So it comes down to, and not everyone has that skill. You might have someone who's really good in tax or someone who's really good in valuation, and they might not know what everyone else does. There's very few people. So when you brought up my textbooks, those textbooks that I put together with LexisNexis, my last one had 54 contributors. I wasn't trying to be the expert. I found all the experts, and these were the ones who wrote the books that everybody went to. And I went from insurance to investing to valuations to let's say, divorce, everything, like getting the last third of their life, like you name it, the family fight, bringing in like family members, family instituting family meetings, all these things. I brought in those experts and they taught me what it was. So when I walk into a situation, because I've experienced these people teaching me, I'm able to say, we need Craig, because that's and I understand. Now, I don't need to have your expertise. Now, a specialist, you might go and say, Peter, we need to pull the money out of the company and you've got a structure. And that's my specialty. I also have the expertise to know what things should look like. But I'm not going to be the one, for example, you have a tax lawyer. I know what can be done, but there's people who drill down to different parts of different, tax codes or tax treaties or into tax legislation. They're able to go deep down into it. However, I know the generalities, and I would know, let's go to this person. And my job as a generalist to find the best carpenter, for example, the best tax lawyer, and to know the difference. And I feel very blessed that when I wrote my column for 19 years for the Bottom Line, which was the largest accounting publication in Canada, I took it as an opportunity to interview people who I couldn't afford paying for them. And they would teach me because I would go to them. And if I started my column, I'd go to you and I say, what do you make your money on? What's something that people don't know that they should know that you find is like, they should know? And you would educate me and I would
Mm.
go and put it out to my readers. And I'd make you the mentor where I would be like the hero, like the innocent fool, and you would be the expertise. But for me, it taught me to when I'm able to see, I've got my filing cabinet going and saying, I need this person, I need this person, I need this person. I don't need to be the expert. But when it comes to, let's say, the insurance part and putting in the structures that are going to extract the money from the company, that's where I'm a specialist. And sometimes I'm only brought in, and I prefer it that way, for that. However, in many cases, I'm brought in to be a generalist because one of the things, there's three questions that people will ask themselves when they're choosing a professional. One, can I trust the person? What does that mean? The person's doing the best for themselves and for you. Number two, are they committed to excellence? What does that mean? That means they're constantly improving themselves. They're constantly educating themselves. For example, Craig, did I lose you?
No, no, we're still going.
Okay. I see your eyes half closed. This is
Yes.
technology. There you are. So just on the first question. Can I trust you? That means, are you doing the best for yourself and for
Yep.
and for me? If you're going to sacrifice yourself for me, I can't trust you, or you because you're going to starve to death. This doesn't. It's not a long-term relationship. Number two, question that we should all ask ourselves when we're choosing a professional: are they committed to excellence? So, for example, one of the things that I applaud you because at the same time, as you're bringing this information to people around the world, you're learning. And that's a commitment to, commitment to excellence. You're learning constantly. And here's the most important thing. And this is why I find myself stuck actually being involved in selling businesses. They ask the last question, which is the most important question. Do you care about me? Because it
Yes.
doesn't matter if you're an excellent person doing what you do and you're committed to excellency. If you don't care about me, I don't really care to know what you have to offer. And that's in essence the questions that mature people, and you and I deal with entrepreneurs, and because their backsides are like they don't fall for someone's golf game. They're able to see the person's a thinker.
Mm.
They know because they got to where the clients that you and I want, the ones who built real businesses that have families who depend on them, they were able to deal with levels of complexity and they were able to find people to delegate to, not abdicate, delegate, which is something that people they make a mistake. They think, oh, I'm going to hire someone and they'll do it. And then they find out that person ended up robbing them. They delegated. And they're able to do that because there's nothing better than experience. And as I shared with you back in the early 2000s, I blew up and I hated it. I wouldn't recommend it. However, when I go to a young person, they ask me if I think they're going to be successful. And I said, you're a smart person. I hope you fall down and you have the tenacity to get up because that's when we'll know who you are.
True enough. So we've only got a couple of minutes left, but I did want to comment on one thing that you said there. You were talking about back in history. I worked in the IT industry, and when I'd go for a job interview, pre-internet search capabilities, your unique selling proposition is you're highly connected. Mine was back then, that's okay. I don't know everything, but I know the person that does. The Google search came along and changed a lot of that because then people could just go pling, pling, pling and look things up. So, Peter, you've commented about risk, you've commented about people. In 30 seconds, what do you think people should do after this presentation right now to look at themselves?
The question I ask if someone's got a successful business,
Yep.
the question is this: what do you want to be doing in 5 years? And what are you doing to make that happen?
And I wish people would think about that, Peter. I really do. You've got to be thinking about what's 5 years down the track. How are you going to get out? What are you going to do after? And I had this terrible experience a couple of weeks ago. I spoke with a business broker and I said, so after you've sold this business for them, this dental practice for them, what are your clients doing 2 years later? And she said, well, I don't know. She said, I never talked to them again. She went straight onto my red list. Don't ever talk with them again because they didn't care about the person and didn't abide by your question number 3. It's all about the individual.
It is. And one of the things is one of the people who taught me, gentleman's first name was Rudy, and he'd worked some of the like the largest money, but he ended up going on his own and he did 72 deals and they were pretty big. And he wasn't able to have children and his wife had died. And he shared with me that his clients were his family
Hmm.
because he really got to see everything. And he would hang out with them. Just want to leave a story with you. And this happened early on in my career. As I share with you, my father was a tax accountant in Canada, and he had got a client, and his client with the son, his middle son, had created the largest paper storage company in North America. They were the first ones to do it. And then the choice was going to be they either go public and they get everywhere because Coca-Cola wants to deal in Sydney, Melbourne, Toronto, New York, whatever. They don't want to go individually, right, to different paper storage. So his father had a heart attack. He ends up selling the business. Well, he basically had to sell the business from his father because his father would not stop working. So the person he had sold it to, the father was down in Florida, and he found out he knew the father who he had actually sold in a different place. They're all like everyone was in Florida. And he was trying to tell him how he should be running the business. He didn't know how to stop. The mother begged the son to sell the business because the father was going to die. And I would just leave this with you. I remember being there one day. His father had a heart attack. I can do the story.
Well, we just had a slight tech issue. That's sorted now.
So I like to share with you a story. I had a client who had the largest paper storage company because when all these towers were being built in cities, what like people who were in office towers, they weren't going to go and spend top dollars to go and keep it in those towers. So they created a paper storage. And his partner was his father. His father did not want to let go, did not want to let go. His father in Florida had in, a huge heart attack. He had a bypass surgery. I go and I'm visiting my client, and this is what he says to me. He says, when my father's down in Florida, we make more money because he aggravates me when he's here. And he says, there's no elevator, and it's a second floor where the offices are in this warehouse. It's huge, it's massive. It's got to be at least about 400,000 square feet. Like this is the largest thing in Canada. This, like all the paper is being stored, all the banks, everyone's storing their stuff here. It's massive. And he goes and says, the staff are getting scared because he comes in here, he can't leave, he crawls up after his heart attack and everything, and he won't like he's scaring everyone because he's in his mid to late 70s, but he never planned not being like for retirement. And he sold the business. He got his father to sell the business. He sold it. They made a lot of money. They did a lot of planning. And I worked with the accountant. Now, the end of the story goes is now the father is now retired and he's down in Florida. And the person who ran the merger and acquisition to start doing consolidation, similar to what you're doing with dental practices, he was doing consolidations throughout the world. for paper storage around the world. So, because it just made more sense if I was Coca-Cola, I would want to deal with that one company and they would put it in Toronto, Melbourne, New York, Atlanta, like they would just have one company to deal with it. Well, he found the father of the son who actually ran the purchase, and he was trying to tell the father what to tell the new owner how to run the business. So the question that I always ask is this: asking someone what they want to do when they're no longer doing what they're doing. And if someone says to me, well, I'm going to take up golf, the obvious question should be, do you golf now? And if they
Yes.
say no, the question is, what makes you think you're going to golf later? And I want to leave with this. I had an opportunity to work with a lot of really successful people. Now, in my last textbook, I had 54 contributors. And one of the contributors to my book was the head of um, a very large foundation, $2 billion. And the person who was running who made the donation, he had made the pledge. And I don't know if you remember the pledge, like if you're a billionaire, you were going to promise that you were going to give away $50 billion, sorry, 50% while you're alive or dead of your net worth. So they wrote a book, and the book was called The Art of Giving. And basically was after people like that. So I got into a room with my textbook with the guy who actually donated the money, not the guy who wrote the book with him, who was giving away his money, the actual guy giving it. And I got myself in the room and I tried to give him my book. And he said to me, you keep it, I'm not going to read it. And then he says to me, I've been paying guys like you my entire life that I don't have to read books like this. Oh. And he was right. So I wrote a book called The King of Main Street. And what's different about that book on succession planning, M&A and everything is I did the hero's journey. And I got really fascinated with reading on male aging. And I read over 200 books and academic papers on male aging. And one of the things that I discovered, well, there were several things. What's the difference between the eater and the eaten? I'm asking the question.
No clue.
Time. Time. Eventually, the eater will become the eaten. How great you are. We all go to the same place, right?
Mm.
So Carl Jung called it the morning of life, and that's about ego, growth, everything. And most people start businesses not because, like, we talked about your client who $85 million like eyebrows, right? And I talked about mine with outhouses, right? Like, I don't think they woke up and they said, this is what I'm going to do. It doesn't sound very glamorous, right? But they made money to provide the lifestyle that they wanted to
Mm.
provide to their family and, themselves. So in the morning of life, according to Carl Jung, is about accumulation, ego, titles.
Yep. Oops. We seem to have lost him. We just can't get over the tech issues today. Hello, Peter. You're back again. No, you're not.